Sám CEO společnosti SOFI Noto konečně vystoupil u Jima Cramera, což je oblíbený investiční kanál na CNBC. Anthony zde vysvětluje, proč se pustili cestou konvertabilních dluhopisů, jelikož to evidentně akciový trh nepochopil. Na tohle jsem dlouho čekal, že přijde s nějakým veřejným vystoupením a vysvětlením. O to víc jsem rád, že to konečně udělal a rozehnal pomyslné mlživé dezinformace, kterých byl plný internet. Potvrdili se mi jen moje myšlenky z předešlého videa, kde to celé pro vás sumarizuji. Já jsem David a zdravím tě na tomhle kanále. Shrňme si to nejdůležitější, co ve videu uvidíte a co nám CEO vysvětluje. A to, že tento krok byl pro firmu opravdu přínosem. Konvertabilní dluhopisy emitovaly z pozice síly a ne slabosti. Potvrzuje vidinu na celoroční plusový ziskový výhled EBITDA neboli hrubého provozního zisku v roce 2024. Dále potvrzuje růst sektorů finanční sekce i technologické platformy a menší opatrnost v oblasti půjčování peněz neboli segmentu lending. Vysvětluje, jak vlastně pouze chytře restrukturalizovali dluh, a to konkrétně dva extrémně drahé nadcházející dluhy, kterým končila splatnost. Vyřešili to tak excelentně, že to bude mít jen zanedbatelný dopad na zisk na akcii a navíc si tím zvýšili i účetní hodnotu. Ano, vydávají akcie, ředí, ale hodnota akcií se zvýší o 8 až 10% a mnoho dalšího. Vedení firmy mě opět utvrdilo v tom, že opravdu ví, co dělají, a to mnohem lépe než všichni ostatní. Tak se na to pojďme společně podívat. Mějte se.
By a flood of new stock. Now, I know many of you are frustrated about this. We've gotten a lot of calls about it. I feel frustrated too because I've championed SOFI at many points. When Craig in Florida called about this one a couple of weeks ago, I told him that I still believe in the enterprise and issued an open invitation to CEO Anthony Noto to come on, explain why the stock's still worth owning. Luckily, he accepted. So we can get right to the bottom of this. Mr. Noto, welcome back to Mad Money.
Thank you, Jim. Thanks for having me.
Okay, so you heard what I said, which is that people just feel that after the great run, and it was a great run, after the really terrific outlook you gave, after the stock was moving up, that you yourself hurt the stock, and it went down big, and people feel badly that they bought it at 9, only to find out that, well, something was wrong at SOFI.
Yeah, I think it's important to understand why we did the convertible deals, why we did the buyback, and the benefits to shareholders that I don't think are truly understood by the market.
Well, this is your
Right
chance.
into it. Love it.
This deal from a position of strength. We just had a record 2023, over $2.1 billion of revenue, up over 30%, 40% growth in our members, our first quarter of GAAP profitability, over $400 million of EBITDA generation, and gave an outlook that was going to be for full year positive GAAP profitability in 2024, as well as continued strong growth in our tech platform, as well as our financial services business. And we're going to be more cautious on the personal loan business. What we saw was an opportunity from that position of strength was to lower our cost of debt. We had two pieces of debt that were quite expensive. One we did in 2019. It is a Series 1 preferred that pays 12.5% interest.
That's so good.
5 years after we issue it, we can buy it back in May. If we don't buy it back in May, we'll have to not just pay 12.5% interest, but it actually goes up to 15% interest for the next 5 years, and we can't buy it.
Okay, so in other words, it wasn't like you could play around. If you tried to think that maybe we'll go to 12 and we got to May, you would have, and it didn't go to 12, you could have been hurt. It was not like the risk was, hey, listen, it could go up to 20 here. It was the opposite, which is that you had to get this piece done.
Well, I would put it this way. We saw it as an opportunity to do it and have a negligible impact on GAAP earnings per share, and also combined with a buyback, have it be accretive.
But did you
by
think
8
the
to
stock
10.
was going to get crushed like this?
Let me finish. Have it be accretive to tangible book value per share by 8 to 10%.
Okay.
When you do a convertible, there is pressure on the stock from investors shorting the stock against the convertible to delta hedge. That does happen. So there is typically 5 to 10% decline. But the reason why we did it is really important, because I think this is what will put some momentum back into the stock. First is we had this 12.5% debt. We also had another piece of debt that's about $500 million that we pay 7% on. So we're going to save between $40 and $60 million of interest expense a year by refinancing from 12.5% down to 1.25% where the convert is, and from 7% down to 1.25%.
So in other words, you didn't need to raise money because you have a lot of bad loans.
No, we did this to lower our cost of debt because we have done so well as a company. We can now issue debt at 1.25%, retire the 12.5% debt and the 7% debt. Now, we also bought back a convertible that we issued in 2021. In the fourth quarter, we bought $90 million back of that convertible. Someone approached us and was willing to sell it to us at 78 cents on the dollar. Well, as our business continued to do better, the convertible kept going up and it was in the mid 80s. And what we decided to do was buy back $600 million of that convertible at 88% of the face value because we'd have to refinance that in 2026. There was $1.1 billion of that outstanding. By buying it back, it actually was accretive to book value per share, tangible book value per share.
I could read things and say that there's even more stock coming from SOFI, that they may not be done.
It's completely false. Let me explain why. The interest expense is going to be captured when we refinance that. That's a known thing, $40 to $60 million. The buyback of the $600 million convertible, we are issuing stock, but we're doing it below the value on those convertibles. And therefore, that transaction is 8 to 10% accretive on tangible book value per share. So yes, there's stock being issued, but the actual value on the tangible book basis per share is going up by 8 to 10%.
But this market has not been defined by that, because if you take a look, Citi's tangible book value is dramatically higher than its stock. People want earnings per fintech.
Borrow business, so they'll get that same growth and a negligible impact on GAAP EPS from this deal, and 8 to 10% accretive on the tangible book value per share basis. So they can have their cake and eat it too with SOFI.
Okay, that's important. But now a lot of people say, well, you know, Jim, you like SOFI, you didn't like Robinhood that much. Robinhood has crypto, SOFI no crypto. Why don't you have crypto?
We don't, because we're a nationally chartered bank in our deposit business, and that's not permissible. Our deposit business, our checking and savings account business, which we call SOFI Money, doing extraordinarily well. The strategy has played out tremendously well. We continue to have record deposit growth. 90% of our deposits are from direct deposit customers, which means we're their primary relationship. In addition to that, 97% of our deposits are insured. So super high quality deposit base that funds our loans at higher margins and better returns. That's how we hit GAAP profitability in the fourth quarter and hit our long-term EBITDA margins of 30%. So it's all working together fundamentally. And now we've improved the balance sheet. One thing I forgot to mention about the buyback of the convertible, not only is it accretive at 8 to 10% on a tangible book value per share basis, if we had done it in cash, it would not have been. In addition, by doing it in stock, we increase our capital ratio to 17.3% if you pro forma the fourth quarter from 15.3%. We only need to be at 10.5%. There's such a huge cushion now in our capital ratios. It allows us to navigate whatever's in front of us.
All right, last question. Is it possible for you to go on the road to large institutions and explain to them what you just said to me? Because some of the parts, $7, tangible book, earnings go up, no worries about bad loans. The stock should not be at 70.
Yeah, since we did the convertible, there was definitely pressure from people doing the delta hedge.
But big institutions would understand that.
Absolutely, but at that same point in time, there started to be grave concerns about interest rates and what the Fed would do. The clarity we saw from the Fed today drove a big increase. But between today and 3 weeks ago was the period of time where people weren't sure, is it going to be higher for longer? Are we cutting rates in May, maybe June? So that uncertainty weighed on the stock as well.
Fair enough. I'm glad you came on. That speaks louder than anything else you could do.
Absolutely. Thank you, Jim.
Thank you, Anthony Noto.